Edward Stevenson, TimelessWealth.net, and the following is basic technical analysis on Zevotek Incorporated, traded under the symbol ZVTK. First and foremost, I'd like to wish everyone a happy and prosperous New Year, 2010 that being. I'd like to offer some additional notes on the price action concerning Zevotek Incorporated, following several videos issued back in late 2009. Last time I talked about ZVTK, we came off this nasty retracement where the price declined some 40% after hitting and testing resistance at 1 6/10 of a cent. So quickly here, I'm just going to add the annotations I had last time. So this would be the first resistance level I talked about. That was the 1 6/10 of a cent level. You can see that coming off of this session, it hit a high there and was pushed down by the bears, as well as on this session where in the morning, of course, if you were watching a session, I did a 60-minute chart so you could clearly see what happened. The price rallied, bumped its head on this resisting level, and then tumbled below several key supporting levels I talked about prior to that. However, coming off of this trading session right here, the price found new support at the 0075 area, so we'll indicate that with a green line right here. Something like that, and also at the 10-day simple moving average, which is this blue line right here, which currently agrees with the parabolic SAR, and that would be these dots right here. So this would be the support that the price found coming off of what I believe is Wednesday's trading session. This inverted hammer formed, and what that usually signals is reversal in trend following this downtrend right here. I also mentioned that coming off of this session right here, that we closed with a hammer candle on the 60-minute chart, and that would have served for excellent swing trading opportunity in the event that you got in anywhere near the low of the day or the close, and you played the high on Wednesday's trading session, which would be this wick right here. So on Wednesday's trading session, the price found a new low, found a supporting level, and bounced off of it. And on Thursday's trading session, which was obviously the last trading day of 2009, we saw below average volume, which is pretty typical. However, the price appreciated 26.25% to close above several key resisting levels that once supported the price quite well, especially during these two trading sessions right here. So the first one would be the 0096 area, and that would be this high right here. Let me just adjust that line. You can see that on this trading session the price hit that high and retraced back to close underneath that 0075 area. The session following, it broke past that resisting level, tested this high again, and was not able to break past it until the session afterwards, which was this one right here. And then again, during this trading session, you can see the price did not open at this 96 level, but actually opened higher, gapped up, pulled back, and tested this once supporting level, which would have looked like this at that point, and then appreciated in price. Finally, this trading session determined this as resistance once more, and it's not until Thursday's trading session, as you can see right here, that the price finally broke above it once more. As a result, now this line looks something like this, and it represents support. The other supporting level that I'm looking at is the 1 penny mark, and I mentioned this is very crucial level, especially when you're dealing with sub-penny stocks, because A, it serves as resistance dating back to prior price movement, which is what technical analysis is basically based on, and 2, the fact that it serves as psychological resistance, that is going from sub-penny to penny level. And you can see the price closed above the 1 penny mark, which now deems the 1 penny mark as support, and that's very key. What I'd like to see is above average volume to come in and the price to find support at the 1 penny mark. As for resistance, on the flip side, we're looking at the 1 2/10 of a cent mark that I've mentioned numerous videos now. In the event that you missed those and you'd like to look at them, they are archived at my site, TimelessWealth.net. The address is right here under the section called Publications. so you can review that. I have a few videos on ZVTK. So this would be the resistance level I'm talking about, 1 2/10 of a cent, followed by the 1 6/10 of a cent. In the event the market appreciates past 1 6/10 of a cent, the next key resisting level is not until 2 cents per share. Now I'd like to briefly mention the purposes to these videos altogether. The idea is not to encourage or discourage anyone from buying or selling this security, but rather to give insight on why the price closed at certain levels, what's going on, how does emotion play a factor with the price, and the charts in essence depict that. They show you that right here the emotion is running high, you had this high emotion gap, and all of a sudden panic selling, so the emotions almost had a change of heart, if you will, while the price declined. People who are swing traders, intraday traders, just day traders in general, can use these levels to perhaps adopt a technique where they buy at support and sell at resistance. And these channels here are quite large percentage wise, and the market is more than liquid enough to have a substantial amount of money churning through the market and making you a profit. On the other end, if you are a ZVTK long, the market will allow you to add to your positions on supporting levels and perhaps sell resistance. This way you begin accumulating perhaps a free position amount of shares, so to speak. There are many different approaches. What I'm trying to say here is that if you've watched my videos, you'll see they're all interconnected, and these supporting and resisting levels return every now and then. The 007 area is not the first time I've mentioned this. On the 60-minute chart, you'll see that the 50-period simple moving average is interconnected with the 10-day simple moving average on the daily chart, as well as this 1 penny mark, the 1 2/10 of a cent mark, and the 2 cent mark, as well as this mark right here. So these are just some key things to keep in mind. And we're looking at things like the RSI in terms of technical indicators. I mentioned that yes, we were overbought. It typically means the price is going to decline, retrace in the market. However, it also means that we're going to see some momentum. We were overbought at this area right here, and then you take a look at what kind of volume came in and how the price moved up. So a lot of opportunity for profits there. The market declined, and there was panic selling. People who accumulated or bought in at support are sitting with some nice gains or some nice portfolios with ZVTK right now, up 26% coming off of Thursday's trading session. So the RSI, really what it shows you is that yes, the market declined, it was natural for it to retrace, and now it's heading back up. And same with a lot of these indicators. MACD churned down, however it never occurred that bearish crossover. Now it's heading back up. The full stochastic should curl up if we see a trading session that appreciates the price. The money flow index is still in an uptrend, and so on and so forth. More or less the same picture over and over again. And that's why it's so important to understand technical analysis, and it's absolutely ludicrous to believe that technical analysis doesn't play a role with OTC stocks, penny stocks, when in fact when you have a liquid market like this, technical analysis can be your best friend. Once again, this was Edward Stevenson from TimelessWealth.net. Now I encourage you to visit my site, again that's TimelessWealth.net, and subscribe to my free newsletter for overlooked trading and undervalued investment ideas. Thank you for listening.